Hello, chart watchers, and welcome to this Friday, September 13th, 2019 Market Watchers live show with your hosts, Tom Bowley and Julius de Kempenaer. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Taking a look at the market action, you can see the uptrend continues. We are off earlier highs, but the Dow Jones Industrial Average currently up 50 points, getting closer and closer to the record highs established a couple months ago. The S&P 500 up 2 points. The Nasdaq's reversed and is down slightly today, down 7 points. Russell 2000 continues to outperform. It's been very strong off of the August low, now challenging that late July high. We are up 6 points currently on the Russell 2000. Big news, 10-year Treasury yield just continuing to power forward. This is good news on a number of fronts, but especially because the money is rotating out of Treasuries. Anytime you see the yield moving like this, it's telling you that Treasury prices are dropping. And as a result, you've got proceeds from Treasuries, which are then available to go elsewhere. Many times they find their way into equities. Some of the best advances in the market, looking back over the 10-year bull market, have occurred when we have these short-term uptrends in the 10-year Treasury yield. So as long as this continues, I'd be looking for all-time highs to be set sooner rather than later. Volatility index continues to drift lower. You can see down another 3+% today, back below 14. We haven't seen this since back in the late July period when we were setting all-time highs on the major indices. That's good news for the bulls. Materials continuing to perform well, and the leadership that we've seen over the past week or two continues. Materials, you can see, financials, they generally benefit when yields are rising. Certainly been the case here over the past couple of weeks. Financials now up, challenging that late July high. Industrials actually taking out that prior high. That's very bullish on the industrials. Transportation stocks, I saw both railroads and airlines leading the industrials today. And you can see the transports trying to make a big breakout. We've talked a lot on the show about the Dow theory. We want to see the transports confirm and break out to confirm any record highs on the Dow Jones. Bank index continuing to perform well as rates rise. We are now back challenging those late July highs. Very good news for banks. The full line insurers making a breakout here. Investment services threatening a breakout. These are all areas in that financial space doing well. Talked about the banks. JP Morgan making a breakout today, helping to lead the Dow. One bad apple here, no pun intended, is Apple in the Dow. You can see Apple down almost $5 today, but it did just break out. So I think this is, and there was news, some targets being cut, so forth. I think that is enabling Apple to go back and test the area of the breakout. 215, 216 is where I would look maybe for another turn on Apple back to the upside. But Apple is weighing on the Dow this morning. All right, Julius, first of all, I want to welcome you into Market Watchers Live. Always a pleasure to have you here. How are you doing, my friend?
I'm good, Tom. I'm glad to be here. A little bit short notice, but, we're going to have some fun.
Oh, yeah, we're always going to have some fun. And speaking of fun, I know we're getting ready to announce the new fall lineup, and I guess maybe some of it has been announced. We had David Keller on earlier this week, and he talked about his show, The Final Bar, and I know you've got a show that is going to be Sector Spotlight.
Sector Spotlight, yeah. Starting Tuesday, October 1st. That'll be a 30-minute show. And obviously, we're going to cover sectors and pretty much everything that has to do with sectors. So I'm looking forward to do that. Obviously, there will be a healthy dose of RRG in there, but not solely RRG, because there's a lot more than RRG under the sun. And I'm going to try to relate all that to sectors in the broadest sense of the word. So we can talk about equity sectors, we can talk about asset classes, we can go deep diving into individual stocks in sectors. We're going to get into the back of sectors, like, how does it composed, what groups are in there, which are the heavyweights, all that kind of stuff I'm planning to go talk to.
Awesome. Now, when you do that, when you look at the rotation and all, the RRGs are obviously very cool, and we talk about them a lot here on Market Watchers Live, but is the show going to be more geared toward longer term, like looking at longer term developments, or short term, or both?
Well, I think it's going to be both. I'm still not completely clear on how I'm going to do it, because it's going to be a weekly show, 30 minutes. So, when you do what I usually do, look at weekly RRGs, then obviously from one show to another, there's only one new observation. And I'm afraid that when I only look at weekly charts, the only thing I can say is, well, listen, folks, nothing much changed since the previous time that we were on. So we're definitely gonna dive into dailies as well, and we're gonna cover a little bit more of universes to have something to talk about. But I'm sure we'll manage that. So it'll be shorter term and longer term. What I think now is, like, maybe once a month do a longer term outlook, like what's the big picture, and then the other 3 just zoom in, building on that longer term picture, and then after 4 weeks do the long term update again and carry forward so that people get a sense of what's going on and get like a sequel.
Awesome. So that's going to be Sector Spotlight. And you said it's going to be on Tuesdays, right? Every Tuesday. Do you have a time?
Every Tuesday. That's a very good question. I think it's the U.S. time, 11:30 a.m., I believe, but I'm not 100% sure. We're still dealing with that.
All right. Well, we will definitely be talking about that more in the future. Just everybody, make sure you mark your calendars.
Tuning in for this, and it's going to be at it is a 10:30 a.m. Eastern.
Oh, okay. There you go.
There you go. 10:30. That's 4:30 from me. Yeah, I'm still messing up at the time zone. I'm gonna make sure that I'm on time on Tuesday the 1st.
I was gonna say, you don't want to be an hour late to your first.
No.
You're forgiven, Julius. You kind of live in a separate world from us. So.
Especially because it's a live show. If it was going to be recorded, then I could wing it. But
Exactly. Well, we're very excited with your new show, and of course, as we mentioned, Dave Keller is going to have his new show. The Final Bar is going to be on every day at 4:00 when the market closes. I'll be doing Trading Places Live Tuesdays and Thursdays from 9 to 9:30. So we got a really exciting lineup coming up. You want to make sure you stay tuned. StockCharts TV. All right, let's get into some of today's action. We did have a couple of economic reports out this morning, and started off with retail sales. Oh, actually, maybe I should let everybody know what we're going to do before we get into all that. All right, so we do have an upcoming schedule there on your screen, Tom's Workshop. So I'll be doing something on Tuesday, probably talk a little bit about my upcoming show. Dave Landry will be joining us next week. Julius, you're coming back next week. Make sure you mark that on your calendar. I don't want you an hour late.
Yeah, no. That's my 3rd Thursday, still coming.
All right, and then Grayson Rose will be joining us on September 23rd. All right, as far as today goes, and we do have a pretty good lineup scheduled for today. What's hot, what's not. So, Julius, we were just talking about your show, Sector Spotlight, RRGs. Everyone will get a little taste of that if they haven't already seen it during the What's Hot, What's Not segment. Then we'll do the 10 in 10. Bank of America is our first stock today. Check out that chart, see what you think, see if you agree with me. Banks have been hot, so that'll be a good one to start with. Key economic reports out today. You can see there on your screen, August retail sales came in better than expected, but when we strip out the autos, they actually came in a little short of expectations. July business inventory slightly higher than expected, and September consumer sentiment did bounce this month and was a little higher than expected, but that's still a pretty low number looking back over the last few years. So we want to see that consumer sentiment number continuing to rise. That usually helps to fuel a bull market. I think if we get that breakout and start moving to all-time highs, I think you're going to see consumer sentiment beginning to rise with it. But that will be something to watch. All right, as far as the reaction in the bond market, this is a really big story here in September. Didn't know when we would see a move. It seemed like the yield was getting very, very oversold to the downside. The RSI throughout August was below 30, had a positive divergence. Well, here we come. 10-year Treasury yield been on a rise. We were down the low 140s. Now we're at 1.87%, up another 8 basis points today. If you want to know why financials are doing so well, all you have to do is look at this chart. Anytime you see the 10-year Treasury yield moving like this, it's going to impact banks in particular because of their net interest margin. These are the 10-year Treasury yields tied more to longer-term rates. And so anytime you get this move to the upside, generally, it is going to impact favorably the net interest margin for banks. So 10-year Treasury yield, we want to continue to watch it. This is the area I've been watching. I figured we'd make a move to 180, maybe as high as 195 on this push. If we just kept going to the upside, that would be very, very bullish for financials and industrials. All right, as far as earnings reports, there was one earnings report out, so I'll go ahead and pull that up. That was Broadcom. They had a slight miss on their top line, but they did beat by a nickel on their bottom line, 516 versus 511. The stock reacted to the downside, and I just want to draw your attention to the relative strength of Broadcom versus semiconductors. Right here, it is breaking to a 9 to 10 month relative low. So yeah, bottom line wasn't bad. It's still holding the 20-day moving average. But for me, if I'm looking at some of the various semiconductor stocks, I think you want to look at others. AVGO is not going to be one of the best, as that relative strength showed you. Check out other stocks like Micron. Micron breaking out to new absolute highs. You come down to the relative strength. Look at this relative strength line here. We can go down the line. There are others. KLA 10 Core pulling back a little bit recently on a relative basis, but the overall long-term trend is higher. So we want to continue to monitor that one. Applied Materials also doing well. Got a nice little cup in play. May see a pullback here, but the relative strength here has been strong. If you like a smaller one, I think Lattice Semiconductor breaking out to new highs here. Relative strength very strong. And then finally, one last one, LRCX, Lam Research. And there are others out there. These are just a handful that I picked. Really nice move up, going up every single day. Relative strength breaking out to new highs. Great performer versus the S&P 500. So if you like the semis and you like the fact that this is a group that's picking up steam relative to the S&P, I would look for leaders within that group. A couple other things I want to mention. This is a long-term look, and I know Julius is going to be talking about financials a little bit later during What's Hot. But I just wanted to point out that financials, we tend to look at the last year and think that's what the market is all about. I think you need to take a longer-term picture sometimes, because we forget that financials and industrials led a huge rally in the market back in 2016 and 2017. You can see XLF relative to the S&P 500 was shooting higher during that period. This is what was driving the market higher. The last year and a half, you can see that we were under pressure to the downside. But if I annotated this, you would see that this trend line right here, this relative trend line, remains intact. And now we're just starting to break back up above that 50-week moving average, the 50-week simple moving average. So we're starting to see relative strength. Watch that relative PPO. If that breaks up above the zero line, this could be one of your leaders going forward the next several months. If the bull market, if we do break out, it's very possible financials lead to the upside. So I would keep an eye on this. Same goes for the industrials. This is the same chart, 10-year relative chart, XLI to the S&P 500. If you take these lows and connect them, we are still in a longer-term uptrend. Last year and a half, yes, industrials have underperformed, no doubt about it. Transports have lagged. They're starting to show some really good signs, though, and now you can see breaking back up. If we break this downtrend line from the last 18, 20 months, I think that would be very bullish. Again, watch that center line resistance area, something to keep an eye on. All right, let's take a look at the scooters here. And you can see today, one of the stocks leading here is Kemet, K-E-M. And you can see on that little mini chart, that move to the upside, the scooters at 78, 38 points higher today. Let's look at the chart. And the chart doesn't necessarily say we should just go jumping into the stock. Sometimes these scooter movers give us great opportunities. Others, I think maybe we want to be a little bit more cautious. We've seen this before. This stock has had plenty of pushes to the upside, just like it's having right now. But it always, well, not always, in the last 12 months, it has always topped out in the 21.5 to 22.5 area. So yes, you've got another $1 to $2 to the upside before we test some really key areas of resistance. But we also have had some big moves down to about 15.5 to 16. So you have to evaluate reward to risk. Here's a stock that's got maybe $1 or $2 up to the key area of resistance, but has probably about $3 or $4 down to the recent lows. So yes, it's having a good day. Yes, it's breaking out above this little flag, short-term flag pattern. But when I look at the long-term chart, I see a chart that, one that's going sideways. Here, you can see that stock relative to its peers hasn't been that great, and its peers relative to the S&P have been in a downtrend. So yes, it's been a really good stock, and we're seeing the scooter jump today. I don't know that this is enough information to make me want to jump into KEM. So for that reason, it is your scooter mover of the day. When we get back after this message, we'll go into what's hot and what's not. Be right back. All right, welcome back, everybody. And it is time now to get into what's hot and what's not. We're going to start with what's hot. Julius, I see those RRGs. You got them set up. I know a lot of folks love visualizing what's going on. What do you have for everybody today? What's been hot?
Yeah, Tom, as you know, we look at sectors a lot. So I thought take it from a sector perspective. This is a daily RRG, so it's not the weekly as you used for me. So this rotates a little bit quicker because we're talking about what's hot for the last week. And this picture actually gives a pretty clear picture of what's going on and what's hot and what's not. It's the aggressive sectors here that are hot over the last 5 days. We'll get into this stuff later on. But for now, it's energy that's powering towards the leading quadrant. It's financials, as you mentioned, and I will go a little bit deeper into the financial sector later on. Materials getting ready into the improving quadrant and moving towards leading. Industrials, communications, and even technology, because technology, as you can see here, that's the little yellow, almost no tail. And when a sector has a very short tail, and as you can see, it sort of rotates in that same spot, doesn't do a lot. That gives me an idea that it's a stable trend, and because it's on the right-hand side, it means it's an uptrend. It's a relative uptrend against the S&P 500. There is little momentum, but it's powering on. It's like a diesel train going higher. For now, I like to go into let's have a look at energy first, because that's the one with the highest momentum. That has been under pressure for a long time, and I should match this with a daily so we get it better. And we can zoom in here. We can see that this long-term downtrend in relative is about to turn around. This is an early call, but you see that there is a lot of power, and that's because of that RS momentum line that's moving sharply higher. So I'm looking for this relative trend to turn around. And then the confirmation will have to come from the price chart, where we're still under pressure from this falling trend line. It looks as if we are having completed a little bottom pattern here, but energy is a sector that's really hot right now, and it looks like it's going to be doing well in the next few days. We go down to energy. I'll skip financials for now because I'm going to get back to that later. Industrials seems to be breaking to new highs. That is actually very good. That's a strong sign. And as you can see here on the relative, we are actually breaking out of this downtrend that has characterized this chart since late February, early March. And you can see that here the RRG lines have been predominantly below zero. As I'm looking at the red RS ratio line here, that indicates the trend. We had a little hiccup here in April, but then we dropped back and we continue to lose relative strength until now, until recently. And what I do like always is combine it with the price development, and you see a little, you can call it a double bottom, a triple bottom, call it anything you like, but it looks like a bottom formation to me. And now we're breaking above this horizontal resistance level to new highs. So that is very strong. Now let's move into the financial stuff then, because that is actually a sector. It's a big sector. It's an important sector. A lot of people look at it. And as you mentioned, with yields going up, money flowing out of the bond market, the most likely place to go is the stock market. And then in the stock market, the financial sector usually benefits when yields go up. You know, just think about the mortgage of your house. When mortgage rates go up, banks make more money. It's as easy as that. So if we look at the chart for financials, we're looking at, this is a pretty typical chart for a sector. They're pretty much all the good ones are pressing against those highs that we've seen in 2018 and then a little bit later in 2019. And as you can see, we're closing in on that resistance area. So that's like, I don't know, like 28.50, 29 is the area that I'm looking for. The relative line is improving. We're getting out of this doldrums here. We're getting higher. We need to clear a couple of overhead resistance levels in relative strength, but the RRG lines are looking good. The RS ratio is above 100. That means that the mode has flipped to positive, so there's a relative uptrend, and that uptrend is still gaining momentum. So that made me take a closer look into the financial sector. And I give you a little bit of a heads up, because This week, tomorrow, we have the Chart Watchers newsletter coming out, and I will be one of the authors. And the article that I wrote was actually about financials, and I think there is a leadership role for JP Morgan, and we'll dive into that later on. So this article, you can look for it tomorrow in your Chart Watchers newsletter. It talks about financials and some individual stocks. And what I'm looking at here is that financials is inside the lagging quadrant, very close to the center of the chart, not doing much, very stable. And then you want to go, if you see something like this, you want to go and look at the daily. And the daily is actually a beautiful rotation. This is the same period. It's 25 trading days. That covers the 5 trading weeks that was on the weekly chart. And you see this very nice rotation from weakening through lagging and improving, and now going into the leading quadrant. This is the price chart that we've just been looking at, and this is an RRG that holds the top 8 stocks of the financial sector. And I've actually here on the image, I've annotated it with the weights. So you've got Berkshire Hathaway with 12.5%. That's the biggest one. Although I have a little bit of trouble with saying that's a financial stocks, like more of an investment fund. Real operational stock, JP Morgan, 11.7%, probably the best rotation in this sector. And then look at Goldman, USB, and then Wells Fargo is doing fine as well. And we're going to get back later to American Express and Citigroup, as they're not so hot. Why do I think that JP Morgan is such a nice stock? Well, first of all, because it is rotating, and this is the live version of that chart, rotating from leading back into weakening. So we had the first relative move of JP Morgan starting somewhere in May when it entered the leading quadrant. It followed through nicely, then it lost momentum, and it stopped losing momentum here. You see that, look at that tail shrinking. It's like coming to a rest and then turning around, and now we're powering back, and you see the distance week to week or day to day getting longer. So this is like the second leg of that uptrend going on. And then when you open up the chart for JP Morgan, you actually get a very nice chart, because this is moving. And then here I'm going to show you the weekly chart, because it is actually breaking to new highs, fresh new highs, and it is at the highest level of the week. We've got a couple of hours left in this trading session. So if nothing completely weird happens today, I think that we're going to close at the highest level ever in JP Morgan, which is a super strong sign. We're rounding off, coming out of the doldrums here in relative strength, and this is on the weeklies. That's why it's in the lagging quadrant very closely. But if you look at that on the daily version of the chart, you'll see that it is rapidly picking up momentum and relative strength and pushing higher. So I think that with financials improving, and I think that JP Morgan will take up a leadership role within that sector in the next couple of weeks. Is that enough, Tom, or do you want me to talk more?
No, that's good. Excellent. I know. I mean, anytime we get going, we can talk forever, right? I mean, there's so many things that going on in the market. But I'm going to go ahead and change and move on to a little different area of the market. You talked a lot about the financials, and I agree. JP Morgan really looking good, breaking out. It's one of the leaders in that space, no doubt. But I'm going to pull up and look at longer term charts when I say longer term, I'm just going to go maybe over the next or over the last year. But let's take a look at the XLB, because the XLB is having a really strong week. This is a daily chart going back the last week. You can see bouncing off that 20-day. This is important to me. When you get these groups that have not been performing well, all of a sudden starting to bounce off their 20-day. See how we really just struggled at 20-day, really more to the downside than anything else. Here, we actually moved above the 20, held back by the 50. We pulled back, hit the 20, held, and now we're making another push to the upside. A breakout here would be awesome. Now, I don't know that materials and energy will be long-term leaders in the market. I think there's a lot of other things to factor in. You've got geopolitical concerns, especially with energy. You've got the dollar, which has a big impact on relative strength in these groups. So there's a lot of things we have to factor in. But what we do want is wide participation in a bull market advance. So if we're getting breakouts to the upside, the more sectors that are participating, obviously all the sectors can't be relative leaders. That makes no sense. If you have 11 sectors, some are going to lead, some are going to lag. But you, on an absolute basis, we want them to be performing, putting in higher highs and higher lows. And I think when you look at the materials chart here, you can see the higher highs, the higher lows. Now we're coming up trying to make a breakout. Now, if we pulled this up and we looked at it, say, versus the S&P 500, and we go weekly, and we go back the last, I don't know, let's go throughout the whole bull market, 10 years, and change this to a line chart, and then pull this up. So now we're looking at relative performance. And you look at this, and it's a completely different chart. The last year, we haven't made any kind of new highs. So that's the difference between absolute strength and relative strength. So yes, it's great to see materials moving up, and I'd love to see that breakout. I just don't know that we're necessarily going to see leadership as we go forward in materials. And the same would go for energy. I'll go ahead and pull that up here, and we'll take a look at the absolute chart in 1 minute. The absolute chart's not been very good, and you can see the relative chart's been absolutely horrible. But we do want energy shares to participate. So again, nice push to the upside. The last pullback holding above that now rising 20-day moving average. At least in the short term, we're starting to show some strength here. Check out that daily PPO now moving positive. These are all good signs. Again, would I expect energy to be a major leader going forward? No, I don't. I think that it'll probably be a laggard on a relative basis, but it doesn't mean that the group won't be going higher. And so that's something to keep in mind as we go forward. Now, industrials, I think this is a group that I think looks really good, and I'm going to stretch this out to a year. And you can see all the all the absolute tops right at about 79, and check out the move that we're making here. We're now breaking out. It's been a straight move up. We're finally getting some cooperation from money rotating out of the treasuries and into transports, and that is helping to generate this breakout on the industrial group. So the PPO looks good. We're making new highs on an absolute basis, and we can take a look at and I think I mentioned this one earlier in the show. I pulled up that longer term weekly chart on the XLI relative to the S&P 500. So let me just do that again in case you came in a little late. And what you're going to see is a longer term relative uptrend. So this is a group that's been incredibly hot. I didn't annotate earlier, but oops. Well, that's the most recent low that I would be watching. But let's pull up a trend line here, a relative trend line. And you will see that if we connect this low in 2012, which was basically a double bottom, with this low in 2015, and then just recently these lows, the one in Q4 of 2018 and the one we just had with the weakness in August, they all line up. This relative strength in industrials is continuing. Again, that gets masked when you look at the last 18 months and you just start getting programmed that industrials are not performing. They're not doing well. Financials not doing well. Well, they just kind of go back and forth in terms of who leads and for how long. Industrials have lagged for a while, but it's beginning to show signs that it's going to lead to the upside. And the reason I think this is important, when you look at the transports, when the transports are moving on an absolute basis to the upside, that generally coincides with very, very strong S&P 500 moves. Look back again over the last 10 years of this bull market. When we broke out in 2010, you can see we had a little bit of a downtrend. This is a shorter one. I think the others will be a little clearer. But when we broke that short-term downtrend on the transports and started rising, you can see the S&P 500. You might say, well, that's not much of a rise. Well, from about 1075 to maybe 1350, it's probably about a 25% gain in maybe 7 or 8 months. That's a pretty strong move. Then when the transports went down, and you can see the S&P, the Dow was doing the same thing, breaking the new highs. We were not getting that confirmation from transportation stocks. That's the Dow theory. When we finally did get the breakout on the transports, look at what happened to the S&P 500. Very little of this sideways congestion. I mean, here, what was this, maybe 18, 20 months of really going almost nowhere on the S&P 500 while the transports didn't perform well. But as soon as they broke out, look at what happened with the S&P 500. It coincided with a huge rally. Now let's go into 2015, 2016. Remember that period where we just went sideways, really struggled? Transports didn't perform well. And while they were not performing well, the S&P 500 went nowhere. But as soon as we broke this downtrend and we started pushing to the upside, check out what happened to the S&P 500. Now, we fast forward 2018, 2019. We've been talking about transports not performing well, been lagging. Look at all this back and forth action on the S&P. If we look back to where the transports topped in the third quarter of 2018, the S&P 500 was over 2,900. Here we are, more than a year later, and we've been struggling on the transports, and the S&P 500 is up less than 100 points. Really hasn't gone. We've had a lot of volatility, but it hasn't done much. Well, I'm starting to see maybe a breakout here of this downtrend line on the transports, and that to me paints a very bullish picture for the S&P 500. If the transports, and we don't have a whole lot more to go to the upside, if we get back up there and clear that third quarter high from 2018, that I think is going to lead to a lot more money rotating into the S&P 500. When we had John Murphy on the show yesterday, John was saying, I don't want to call a bottom in the 10-year Treasury yield, but it could be a bottom. And if transportation stocks are starting to perform well, that's a good sign about our economy. The stock market looks ahead. So if they're buying transportation stocks, that's generally a good sign about economic growth going forward. And that could lead to continuing movement to the upside in the 10-year Treasury yield, which means what? Money rotating out of treasuries, out of the bonds, and moving into potentially the equity market. So I see a lot of positives with what's going on here. Now, again, I don't think that just because these groups are moving up, that the other groups won't go higher. I think technology is still going to do well. I think consumer discretionary is going to do well, but they may take a back seat for a little while in terms of relative strength. And so that's really what I wanted to point out. Now, as far as the transportation stocks, let's go in and take a look at some of these. So if you go back to your dashboard, and I'll show you how you can do this. Under the member tools, go into scooter reports. Now, if you want to focus on large cap, maybe you're a little risk averse, you don't want to really deal with too many small cap stocks, stick with large cap stocks, and you can type in here truck or trucking, and you'll see a couple of the large cap stocks right here. John Murphy talked about C.H. Robinson Worldwide yesterday, and I think also mentioned J.B. Hunt. Well, let's pull up the charts. What do they look like? Well, J.B. Hunt just broke out. And when we look at a relative chart, look at what the stock is doing now. Relative to the trucking group, it just moved to about a 7-month relative high. Trucking just moved on an absolute basis to about an 11-month high. And you can see across the board, you see this strength building? This is an area of the market that hasn't been participating, and all of a sudden, we're starting to see some nice movement to the upside. So this is one way you can get in, find out what's leading, starting to show strength, zero in on the large cap reports. I mean, if you want to go in and look at mid cap, you can do that. It's sorted here in scooter order. So maybe it's a little bit smaller. Maybe this one gives you a little bit more risk, but potentially maybe some additional reward. And we pull this one up on a relative chart. What's it tell us? Well, it tells us this has been a leader versus trucking for the last 10 or 11 months. It tells us that it's been an outperformer versus the S&P 500, even though it broke out on a relative basis to the S&P 500 about a month and a half ago, even though the truckers as a group were nowhere near breaking out to a new high. So you've got a leader with Old Dominion Freight Line, and it's breaking out. Look at the volume coming in. It's just a great way to continue to look at some stocks. And then, of course, if you want to be a little bit more adventurous, then maybe you go into the small cap stocks, and you have in here a number of additional stocks. But with the small caps, you're going to probably see a lot more volatility, so you got to be willing to accept that. That's what I had for the what's hot for Julius. So we're going to move it over to what's not. What do you think? What's not been hot this week?
What's not? Well, there are still, as you said, it's all relative. So I'm going to grab the screen here. It's all relative, so it doesn't make any sense for all groups to go up while some have to lead, some have to lag. And on the RRG, we're back on this sector RRG. By the way, let's start at a higher level. Let's start at the S+. By the way, someone asked how I got the groups on one chart. they're actually predefined. They're in the books here for the selection, and you can actually choose all of these groups that are predefined, so the chart will populate with that universe. You have to be a member to see. You're a non-member, you will not see the underlying here, and you won't see the free version index plus major index. Anyway, what's not so hot? What's not so hot? Pretty clearly here, these reds are all the fixed income related ETFs. So IEF, which is 7 to 10-year Treasury bonds, LQD, which is investment grade corporate bonds, HYG, which is high yield bonds. For educational purposes, when you run this type of stuff on an RRG, make sure that you take total return index, or as in this case, an ETF that represents such an index. So don't put, well, you can do it, but I prefer not to stick the yields into an RRG, because it will flip around. Because when yields go up, prices go down, and when prices go up, yields go down. So in order to compare apples and oranges, I prefer ETFs in this case for this comparison. So what's not so hot, pretty clearly over the last 5 days, all the fixed income related stuff and real estate. And if we go and dive into the individual sectors, and again, that's a predefined group here, you'll see that we have real estate, which is on the low end going down here into the lagging quadrant. And if we bring that up on a, I think I need this version here. Yeah. If you bring that up, and this is compared with SPY, you can see that, as Tom just explained, the chart is still going up. It's not that chart from an absolute point of view doesn't look too bad, but there are so many much better looking charts now. The relative is turning around, and it's turning around sharply, and that's being picked up by the RRG lines, where the momentum line has been dripping below the 100 level since late August, and it's now followed by the RS ratio line, which means that RRG thinks that uptrend has flipped around and has now started to move lower. By the way, when I look at this chart, this is a pretty critical level, around 38.50, probably 38 here to be sure. If we're going to break this level, you can see an acceleration lower. So with real estate, I'll be very, very careful. The other sectors that are not so hot in the sector space are utilities and staples. And again, that's not big of a surprise, because these are really defensive sectors that were in play when the VIX went up, when uncertainty hit the market, when the SPY was correcting, then everybody flocks to these defensive sectors like staples and utilities. But look at them now. They're like shooting into the lagging quadrant. If you look at the charts, and Arthur Hill has recently done in the Relative Strength Week a very good piece on relative strength from the chart, and just looking at the chart. And if you look at staples, that's a very good example. This chart in itself doesn't look very bad, but just go back in your mind to the JP Morgan chart that I showed in the earlier segment. That is going up, and both charts are going up. Both uptrends are intact, but the JP Morgan chart looks so much better. It's breaking to new highs, and staples, yesterday's high, wasn't able to take out last week's high. So that in itself is already a sign that relative strength is fading, and that's just being translated into this relative strength line that you see here, which measures staples versus SPY, and then the RRG lines are the indicators that we need to build that RRG graph. And you see that momentum's been fading, and it's now dragging staples into the lagging quadrant. And then the final version of this chart, or the final sector that I like to talk about, is utilities. That's a classical defensive sector. And if we look at that right now, we see a pretty much similar pattern as with staples. The last high yesterday wasn't able to take out that high. This trend is still, nicely up. But if you look at the relative, that didn't do much. We had some of the uptrend in the last turmoil when the market went a little bit berserk, and we had this high volatility, people moving into utilities, and now all that's gone. It's going to roll around. Momentum was already below 100 at the end of August, beginning of September, and now RS ratio is following suit, and it's probably going to be like maybe 1 or 2 days before that drops below 100 as well. And then utilities will be in the lagging quadrant as well. And then we'll have a setup in the RRG with all the aggressive sectors, with all the pretty much growth stocks inside the leading quadrant and leading, and only a handful of the defensives into lagging. How are we doing on time, Tom?
Well, it's
18,
time.
40.
Probably.
Yeah. Okay.
Did you get through what you wanted to talk about?
Yeah, I guess so. I could go on a little bit long, but I think these are the most important things, so I don't want to get in your way.
Okay. Well, I mean, we have probably another 5 minutes or so, but I can go ahead and go through a few charts as well and give you some of the things that are not so hot in terms of equities. I know that some of the sectors you talked about there, definitely, some of them had been leading while the market was very weak and the market was being defensive. But now that we're seeing the market start to move and more money rotating to aggressive areas, I agree. I think some of these defensive areas, especially real estate and utilities, even though they look good on their overall charts, I think their absolute charts are remaining uptrends. They probably are going to underperform if the market breaks out. So I thought that was great analysis there. But let's go ahead. I'm going to take a little bit different view here. I'm going to go in and look at, first of all, the industry summary page. And I went back to the period and put in 1 week so that we could just quickly highlight what hasn't worked in the last week. Now, when you look down consumer discretionary for a moment, you see that just about every area really had a nice week. Consumer discretionary had a good week. Well, this one down here, restaurants and bars, kind of really sticks out. So using the industry summary and the sector summary is another way of quickly being able to look at relative strength. I mean, Julius, came up with the RRGs, which is unbelievably great in terms of visualization. We have price relative charts that we can use. We got scooter rankings we can use. We also can just take a very simple look at a table view of industries or sectors, and you can quickly see over the course of the last week what's been working and what's not. So restaurants, not really working. Personal products. So here in the consumer staples area, you can see a couple of areas doing really well. Personal products, not one of them. And this has been a pretty good group in 2019. And then the last one I wanted to focus on, financials. Financials have been great this week, but it's asset managers, banks, life insurance, reinsurance, areas that had not been performing very well are leading with the treasury yields moving higher. There are areas within the financials that were leading that are no longer leading, or at least not this past week. Specialty finance, one of them. So I thought what I would do is start with the restaurants. And what this is a relative chart of restaurants versus the S&P 500. And you can see, without a doubt, starting in about late July of 2018, restaurants have been a great place to be in the market if you're trying to beat the S&P 500. Here, though, we have shown weakness the last 2 weeks. I still believe we're in an uptrend. I'm not ready to throw the towel in on restaurants. Again, do the transports make that breakout? If they can, and more money starts rotating toward transports, then that's going to leave less money to rotate into areas like restaurants. And so we might see a period of consolidation in restaurants, maybe even a relative downtrend for a while. But short term, clearly you can see that we are moving back down. But overall, and we've seen this before, by the way, during uptrends. We've seen here 2 or 3 months we pulled back and went sideways on a relative basis before turning right back up again. So that's one thing to consider. Another area, personal products. This is one that had been in a downtrend, but since the bottom in January of 2019, this has been a leading group. Now, this one breaking back down makes me a little bit more concerned because it hasn't had that longer term strength that we've seen in the restaurants. So unless we get a turn pretty quick, I don't know that I'd want to go below this low, or excuse me, that prior relative high. So the relative, I think we're getting pretty close to a key area of relative support. Definitely would not want to go back below that 50-week moving average. And then the last one I wanted to show you was the specialty finance. Another one that's been very strong. We went through a period of consolidation about this time last year. Maybe we're going to do the same thing here. Specialty finance kind of taking a back seat with the 10-year treasury yield moving up. Now, the big question for me is whether or not that yield completely reverses that downtrend and breaks out to the upside through, say, 1.95 to 2% on the 10-year treasury yield. If we can do that, then I think some areas that have been leading probably will lag on a relative basis, and we'll get those new leaders. Last thing I wanted to show you real quick. If you go into the scooter summary like I did before on the What's Hot, all I did is went into large cap and I typed in restaurants, and then I went over here and changed the period from intraday like that to 1 week. And the reason I did that, and I sorted it by the change, because this is another way. Okay, restaurants not performing well all of a sudden the last week or two, but which restaurants are seeing the biggest changes in their scooters? And here you can see Yum Brands is, McDonald's is, not as much though, Chipotle and Starbucks and Darden Restaurants. So these three, which have the highest scooter scores, are actually holding up better than these other two. And I could go in for specialty finance and I could do the same thing. So specialty finance, and there you can see the three, and you can look at the relative movement in the scooter. Just another way to use the tools here at StockCharts to check it out. All right, that is your what's hot and what's not. So we will get you a summary slide. Very interesting, Julius. It's always fun to have you on the show when you've got your RRGs up, because, you know, as much as I try to show folks how to visualize these other ways on relative strength, I don't think there's any clearer illustration than what you show on your RRGs. I think it's fantastic.
Yeah, the thing is, when you look at that table, it reminds me why I came up with RRGs, or the process that led to RRGs, because I was looking at those tables all the time. And the problem with those tables is that it shows you what's happening right now, but it doesn't show you any trends or developments over a longer period.
Yeah.
And that's one of the reasons how RRG came to life.
That is a great point. I am looking at a 1 week period here and what's going on with the scooter over 1 week. But with those tails, adjusting the tails, looking at the daily versus the weekly, you can see that constant rotation, which is a great point, no doubt. All right, we are going to move into the 10 in 10. And I know the first symbol today is going to be Bank of America, which is rather timely since the banks are starting to make a move. I will tell you, Bank of America is okay. Not one of my favorites, but here's the chart. So let's pull it up, look at it. I think the battle lines are pretty much drawn here on the chart. We've had two tops in 2019, right up just under that $31 level. We've had multiple bottoms with gap support coming in right around 26. And with the 10-year Treasury yield rising and banks starting to get more and more in focus, you can see Bank of America making a nice push, really good volume trends here this week. And we are getting close to resistance, but we've been here before. So the question is, does the 10-year Treasury yield continue moving up? Have we truly put in the bottom? If so, I expect Bank of America to make this breakout. But I think it's too early to make that call. So I would be a trader of Bank of America. And when we get up close to that 31 level, I would be out personally and see if we can get the breakout. When you look at the relative strength, look at what Bank of America has been doing relative to the bank index for the last 8 months or so. It's been kind of just a proxy for the entire group. It's not really outperforming. It's not underperforming. It's just kind of going along for the ride. Earlier, when I showed you semiconductors and I showed you stocks that were performing better than Broadcom, well, let me show you a financial that I think, if I was looking at the financials, and I think JP Morgan we talked about earlier doing well, but Ally Financial, this is in the bank space. Look at the relative strength here. See the difference, Ally versus the bank index? If the banks are going to be strong, I want to be in one of the strongest banks. Volume has been off the charts to the upside. I think there's a lot of accumulation going on with a stock like this. And we could even do one more real quick. JP Morgan that I showed, or that Julius showed earlier. Here is the move on a relative basis. It's been one of the stronger stocks in banks. So if I was looking in banking, looking for a stock, it wouldn't be Bank of America for the reasons I just gave. I like JP Morgan, maybe as a more conservative play, maybe a little bit more aggressive would be Ally Financial, ALLY.
Ladies and gentlemen, this is now 12 in 10. Here you go. The second stock for the 10 in 10 that we had is ALK, Alaska Air Group.
All right, ALK. Yeah, I said earlier, it's hard to not talk about things. When you see something and you want to make another point, and then there's always another point to make, and then another point.
Exactly.
It just never ends. Here with ALK, I mentioned earlier, airlines having a really strong day today. Alaska Air has been very strong over the past 2 to 3 weeks. Volume just kind of so-so. So we're starting to see a little bit of relative strength. I'd like to see a little volume come in if it makes this breakout. So if you see Alaska Air closing above, say, 67, see if it's on light volume like we've been having, or if it's on heavier volume. I'd be more convinced that this stock has more room to the upside if we get some volume coming in. Otherwise, I'm going to, I don't know, maybe be a little less aggressive, maybe more cautious on the stock. So it's okay. I think there are other airlines out there probably a little bit better.
Okay, so next one up is Dean Foods, DF.
All right.
Delta Foxtrot.
Yeah, and I saw some of the food stocks were doing much better. You can see we're pulling back here. I don't like that candle yesterday. It's not technically a shooting star because you should get a gap up on a shooting star, but here it's an inverted hammer, which is kind of the opposite of a regular hammer on a downtrend. So this to me paints a top yesterday's candle, and sure enough, we're pulling back today. I think the volume trends here look good. It's starting to show some strength on a relative basis, but it has been an underperformer for quite a while. So I think I would have to keep my stops fairly tight. I think right here, you've got that rising 20-day moving average. And also after the gap down back in August, notice the reaction high was up here at about this 130 level. That's right where the 20-day moving average is sitting as well. So if it gets down to that area and like the stock, it would be an aggressive trade, but I'd be okay with it the closer it got to $130. Just keep your stop in play.
Next one up, ENPH. And Phase Energy.
Yeah, this has been a crazy underperformer of late. And I had a question from a member at Earnings Beats, because this is one of the stocks that we certainly liked. Was a great performer in our aggressive portfolio going back the prior 3 months. It gained over 100%, but now we're seeing the opposite. When it broke below this top of gap support, I expected that it was going to go fill this gap. And that's exactly what it's done. This is where I think the stock needs to turn, though. I do think renewable energy has been very strong. There was the massive volume that came in with earnings. The stock went all the way up 35 and change. Yes, it's pulled back a lot, but it's a volatile stock. It is a stock that's moved from under $5 at the beginning of the year to $35. You're going to see a lot more volatility. I think off this uptrend, we could see a cup. I think this is an area where the stock, I'd like to see the stock hold. 2165 is that gap support, so I'd watch that.
All right, next one is for you, honey. Well, HON.
I see what you did there. All right, HON. Yeah, I like it moving back up again, getting through the 20-day moving average, getting above the reaction highs, which was prior support. That became resistance, failed at the 20, then we broke back up above it. So I think it's starting to show better signs. And this is what I was talking about with volume. When I see a stock moving up like this, I like to see the volume coming in. To me, it's a better sign of accumulation. We still ultimately need to see that breakout. But the one thing that I would watch here on this stock, if it truly is beginning to outperform, we should watch that 20-day moving average act as support on pullback. So if it can hold that, turn back up again, that would be very bullish.
All right, and then the next one is Adesto Technologies, IOTS.
All right, IOTS. Yeah, I really like this. I like the volume coming in. I like the breakout, continued movement to the upside. We are probably going to move up to test that intraday high that we saw back about a month ago, right there. I think we're going to head back up, test that level, maybe consolidate a bit. But given the volume trends and the move to the upside, the relative strength is another one in the semiconductor space. I like it. It's going to be a volatile stock, so you got to be, willing to take on that risk of these moves back and forth. But I do think this one breaks out and moves higher.
All right, next one, NAVI, Navient Corporation. It's financial stock. Let's see what that does.
Yeah, I mean, it's starting to make a nice little move, and I'm actually seeing what could be an inverse head and shoulder pattern. It's not been one of the better performers on a relative basis, but what I would be watching is off of the top right here, uptrend, come down, left shoulder, neckline, lower low puts in the head, right side of the neckline. If we pull back to around the 20-day moving average, I think that could be an opportunity and would eventually set up the rest of this pattern. But what you want to see to confirm the pattern is the breakout, and I would say increasing volume, close over 1375, and I think this one could probably measure up to about the 1550 area, which would coincide right with that prior high.
Excellent. So we can go shopping with Shopify, SHOP.
Yeah, a lot of the software stocks really have struggled. Shopify, one of them, but it does remain a leader. So what I would simply point to, these stocks have come a long way. I don't want to, get overly bullish at this point because they have come a long way. But this is a stock that continually puts in higher highs and higher lows. I would simply maybe watch that last time we saw some selling in recent lows down about 310. I think it probably holds this low if it even gets down there. But the relative strength, this is what I wanted to mention. Whoops. Well, we can put that line in right there. That's where we had our most recent relative breakout versus software. I think we might be going back down to test it. But overall, this has been a great performer. I am not ready to give up on Shopify.
Let's see what you think about SNC.to, SNC Levelin for our Canadian friends.
All right. Well, the relative charts won't help us here, but what we can do, I like the breakout that's going on right now, and it's been in a downtrend. The only thing I would say is that you do have some very important gap resistance right here, heavy volume selling in early August from that 21 area. We're testing that right now. And the other thing to watch out for and be careful is if we leave a tail up here and come back down and fail on this breakout. So get above the 50 intraday fail on the close with heavy volume. That could mark a top. I would just be a little careful there.
And we finish off with Valaris, VAL.
All right, VAL. And yeah, Valaris. I think same thing here. It's in a downtrend. We got overhead resistance in terms of gap resistance. So there was the top of the gap. Here's where we opened, and you can see that was a prior low. And look at all these failures right here at this level. This could turn back down from here. Watch that 20-day moving average. If that gives way to the downside, I'd be really careful. This has been an underperformer for a long time. So not a big fan. I don't like today's reversal. It had a new high intraday, was all the way up to 708. Now it's 633. I just think this is a possible pivot area for the stock. So keep an eye on it, on that. And that is your 10 in 10 for today. Hopefully helped in terms of some of the questions that came up, taking a look at some of those charts and annotating them. But Julius, what do you think is going to go on? We got about a minute here, and we can pull up the poll and see what folks think about sectors and so forth going forward. But what do you think about the Fed reporting next or coming out with another announcement next week? Do you think they're going to cut rates again?
I'm not really a Fed watcher. I'm not into all that, but I'm surprised what they did. Like, they're like following Europe. If I comment from a European point of view, where we had another cut by the ECB, and Draghi is starting to do it again, and there's lots of talk about pension funds not being able to meet their requirements, and I assume that something similar is happening in the US, although rates are there still at decent levels. Here they're just below zero.
Yeah.
Technically, you get money when you borrow money.
Yep. Well,
not really happening, but
yeah, financials were on the poll as the leading. Folks thought they would be the leading sector going into the end. We only have a couple seconds here. I still like the technology, but I think financials will do well. Watch that 10-year Treasury yield. All right, I want to thank all of you for being with us today. Again, thanks to Julius for joining us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1 p.m. Eastern Standard Time. Have a great afternoon, everybody, and we will see you back here tomorrow. Happy trading.